into Mining Stock Daily. Going to kick off our corporate updates this week with one from Newcore Gold. They continue to trade on the Venture Exchange with NCAU and also on the OTCQX with NCAUF. Happy to welcome in CEO Luke Alexander once again. Straight back from his trip from the New Orleans Investor Conference. I'm glad to see that New Orleans didn't swallow you whole, Luke.
Yeah, good to see you, Trevor. Thanks for having me on.
Last week, the company put out news that you have engaged in independent engineering consultants to kind of kick back up and republish an updated preliminary economic assessment for the Enchi project. I think the first one was done a couple years ago, so obviously, a lot has changed with Enchi over the years. But talk to us about, in general sense, why an updated PEA. Why not just take all of this and fill it into more of a PFS?
Yeah, so Trevor, if you look at the last PEA that we put out in 2021, it outlined very robust economics at a $1,850 gold price. You're looking at an after-tax NPV of $300 million, after-tax IRR of 54%. So a very robust, simple heap leach project. Since then, we've grown the overall size of the resource. So in March of this year, we put out an updated resource, which accomplished a number of things. Firstly, it grew the overall size of the resource. It also converted a number of ounces from the inferred into the indicated category. It added additional deposits as well as an underground resource for the first time ever. So we saw the opportunity to do an updated PEA to incorporate a number of those results that we got within that resource that we put out, and most notably, obviously, growing the overall size of the resource. We spent the last number of months basically internally taking the numbers, updating our internal model, reaching out to various suppliers, engineers, contractors in Ghana to get updated 2023 numbers. On the back of that, we saw again a larger, more robust project, and we thought that made a lot of sense for us to take those numbers and get obviously an updated 43-101 PEA completed on the back of that. So really a larger, more robust project was the big motivation for us to kick off this process, which we'll look to get done by the first half of 2024.
Has the metallurgical or recoveries changed at all from that previous PEA as well?
Yeah, it's a good question. So one of the things that obviously we've also been doing is de-risking a number of elements on the project over the last couple of years. So as I mentioned, the resource update grew the overall size of the resource, converted a bunch of it into the indicated category. But over the last couple of years, if you've been following our news releases, you'll see that we've put out a number of additional MET results on the project. So if you look specifically on the column tests that we've done, and you go back and look at some of those press releases, you'll see that our average recovery in the column tests, which is testing the heap leachable material on our project, is 91-92% recoveries. So one of the things that we'll obviously incorporate into this updated PEA is a lot of that test work that we've been doing. And that obviously further strengthens the and supports the economics that come out of it. We've also been doing a lot of hydrological test work on the project, as well as we're doing some geotech work at the moment. We've also been working on completing an environmental and social baseline study. So a number of these things are basically taking it to a PFS level in terms of the MET work we've done, the geotech work, the hydrogeological work, the environmental, social baseline. These are all things that you'd expect to see within a PFS. And a lot of the work that we're doing is at a PFS level. But one of the key things that you need to take it from a PEA to a PFS is a lot of infill drilling. So we sit at about 740,000 ounces of indicated resource today. And our view would be we'd probably want to take that to around 1.1 million of indicated to then kind of take it to a full PFS, which obviously requires quite a bit of infill drilling. Those other things that I talked about, met work, the hydrogeological work, geotech, environmental, social baseline studies, a lot of that work is relatively low cost work that we can do, which really advances and de-risks the project, but obviously doesn't cost the same as infill drilling. So that's what a lot of the focus has been for us.
Okay. Give me a sense of the cost of this. And the reason I ask is, you and I have shared numerous times. I participated in the last financing earlier this summer. It was a hard one because markets continue to be tough, but you kind of had to do it. I mean, as you tried to keep it as non-dilutive as possible, but it did hurt. But talk to us about how much capital you have in the bank now and how much is budgeted for this PEA and what would be left over to continue to do some of that infill drilling.
Yeah, so we've got about $5 million in the bank today. We all also important to mention, Trevor, board and management. We all participated in the financing, so we continue to invest in the company. We see the huge upside potential that the project has. We got a couple of new institutional investors, deep value focused investors to come in on this last financing. So at the moment, we've got runway for the next 12 to 18 months. Within that, obviously, we've budgeted for the PEA, we've budgeted for the environmental social baseline study, a lot of additional met work on the project. We're also in the process of getting a application ready to apply for a mining lease. That's something we think we can get done by the end of 2024 and really highlights, what a great jurisdiction Ghana is from a permitting perspective and the desire to move projects like ours towards a construction stage. So we're funded to do all of that work. And that's one of the real great things about our Enchi project is we have a huge amount of district scale exploration upside on the project. If you look at, the deposits along the Sefwi Bibiani belt from us, there's a number of 5 million ounce plus deposits. The pits that currently constrain our resource today are only down to about 80 meters. If you look at production at Chirano, which is 50 kilometers to the north of us, they're currently producing down at 800 meters below surface, 1.5 to 2 gram material. So we've really still just scratched the surface from an exploration perspective, but we aren't purely reliant on aggressive drill programs. We've got a project today that is very economic that we can build, which again, that's where as investors in the business, we see a lot of value that we can create for relatively low capital. When the market does return and exploration is more in favor, that's a lever that we can instantly pull to ultimately crank things back up. But where we see a huge amount of value is de-risking this project to a construction decision. And from a capital perspective, I think you were asking, if you look again at the 2021 PEA, we were looking at $100 million of CapEx for roughly 95,000 ounces of production over a 10-year mine life for an after-tax NPV of 300 million at an 1850 gold price. So those are very compelling economics. We've obviously, as I mentioned, run the numbers internally. We see a larger project here given the resource growth that we outlined within the update that we put out in Q1 of this year. So we see the ability to put out a very robust updated PEA for the market.
Okay. I'm really excited about this. I mean, I think the economics of this are only going to improve, but let's see. I mean, time will tell once that gets published, as you said, in the first half of next year, Luke. But give us a sense of, I actually want to follow up with you coming off of New Orleans. I mean, that is one of the most preeminent gold and gold investor forums and conferences out there every single year. it attracts a lot of people. Brian London does a great job of, it's not just the metals and mining and gold guys. It is the big macro and the big picture people as well. So I just wanted to get your sense. What was the activity like for you in Newcore? Maybe any silver linings, but also maybe challenges that were continued to be presented.
Yeah, well, I'd say there was lots of gold linings, given that's our focus. But yeah, I mean, it was an extremely busy conference for us. I mean, we hosted a breakfast that had over 40 investors at it. Had a continuous stream of investors coming by the booth who were either existing or prospective investors. And I would say overall, the environment was very bullish for precious metals and for gold specifically. I mean, I think a number of the conversations obviously surrounded around what the Fed is doing and the fact that it looks like they're most likely going to stop increasing rates, or maybe there's one more rate increase. So there's a view that the U.S. dollar could start to come off, which would most likely be positive for gold. I think there was also a lot of conversation around the fact that gold is trading around $2,000 despite what a strong U.S. dollar we've had. There were a number of other discussions around BRICS and the accumulation of gold that a number of the BRICS countries, along with other emerging countries, have done over the last couple of years, and then obviously some talk around what role gold could play within those BRICS countries and being used as a means to potentially trade between those different countries. So lots of discussions in and around that, which were very constructive for the price of gold. And I think there are a number of investors that we talk to who recognize that there's been a real disconnect between the gold price, the senior producers, and then the exploration developers like us. And inevitably, when you look at a lot of the senior companies out there, they're starved for growth and for projects because there's been an underfunding of exploration over the last number of years. And projects like ours in Ghana, which is a tier 1 jurisdiction to be operating in, are the types of projects that I think will rise to the top as we start to see that interest level come back in the sector.
Did you see the section in the World Gold Council video with Idris Elba going back to Ghana?
Yeah, no, there's a couple of sections in there. There's one where he obviously goes to Ashanti, which is one of the large gold producing regions, and it really highlights what a key role gold plays within Ghana. I mean, it's called the Gold Coast for a reason. But also, there was another whole section, and I'd encourage everyone to watch the video that really highlights the positive impact that the gold sector has had on malaria in certain communities and areas within Ghana. So this whole idea of how gold companies can have a very positive impact on communities, I think was the other or another one of the big takeaways from that video. So yeah, no, it was great to see Ghana highlighted within that video, but it's really warranted because at the end of the day, it is a tier 1 jurisdiction to be operating in, and we're fortunate to probably have the second most advanced undeveloped project in the entire country.
Yeah. Oh, it was very cool. I didn't actually know Idris Elba was part Ghanaian myself. I thought that was a pretty cool, personal tie in that storyline. But obviously, I was, as a shareholder of Newcore, I was very excited to see that section. Selfishly, I might add. All right, Luke. Hey, we're obviously on the road here for the next couple weeks. I don't know the next time you and I are going to chat here before the end of the year, but what are we to expect from Newcore and Enchi here as we wrap up 2023, which is strange to ask because I think that's the first time this year I've asked and said, paraphrase that, wrapping up the year. So that's where we're at.
November 11th,
I know.
Or sorry, November 6th or 7th, depending on when you put this out. But yeah, I think a number of us want to have this year behind us. It's been it's been a tough year for the equities. I think we could, tax loss selling is obviously something that a lot of people focus on heading into year end. I think every year tax loss selling, especially when when we hit June, July, and it's pretty clear to see that equities are going to be ending down. So I think our sector has been hit by tax loss selling starting in August, September. I know we specifically had one large kind of tax loss seller, which we cleaned up a few weeks ago, and you'll see a big volume spike and have started to trade higher on the back of that. Heading into December, I think we're going to see a reversing of that trend. I mean, every year, the buyers who start to step in earlier in December to start accumulating positions from the last of the tax loss sellers who are ultimately selling for tax reasons as opposed to the fundamentals of the company. So I'm feeling optimistic that we're going to see a reversal heading into year end. From a Newcore perspective, I mean, we're continuing to do met work on the project. I've talked a couple times about how we've got a couple of pilot heaps that we're running on the project, 15 tons each. So we're expecting results from those, which is another big de-risking, going from columns to full pilot heaps. So we'll expect those in the next few weeks. I mentioned that we're looking to complete an environmental social baseline study. I'd expect that to be out by the end of the year. So those are a couple of things that we can expect from a news flow perspective. And then hopefully we see some good rallies in Newcore and the rest of the stocks heading into year end.
Very good. All right, Luke. Well, until next time, my friend, thanks so much for joining us. Everybody be safe there on the ground at Enchi. We'll chat soon one time or another.
All right. Cheers, Trevor.
All right, that's your update from Newcore Gold, everybody. Again, trading on the Venture Exchange with NCAU and on the OTCQX with NCAUF.